Welcome back to the Market Podcast. Asymmetric info for individual investors. Educational info only, not financial or legal advice. Consult a pro before investing.
Imagine a world where developers, truly from anywhere, collaborate seamlessly. They're powered by AI that anticipates their needs, secures their code in real time, and just speeds up innovation. No more digging through old tools or those draining commutes.
Right.
Today, we're tackling a really big question. Will GitLab actually be the visionary architect of this future workplace? Will they genuinely lead the charge for the next generation of coders, or will it end up just being another handy gadget in the toolkit, maybe overshadowed by the giants?
And that's what we're exploring. Is this DevSecOps powerhouse, GitLab, truly poised to redefine how we build the digital world?
Right.
Or is it perhaps destined to blend into the background? We're going to dissect GitLab's journey, its strategies, and importantly, the potential pitfalls it faces.
Okay, so to really grasp that potential, we need to look at the people driving this vision. The leadership team at GitLab, it's a potent mix of tech veterans.
Absolutely.
Take Bill Staples. He stepped in as CEO December 2024. He comes with this deep experience from Microsoft Azure, leading developer services that brought in billions.
Huge scale.
Exactly. And what's striking already is how he's fast-tracked their AI integrations, like GitLab Duo. This isn't just small stuff. Duo embeds generative AI right into the developer workflow. It promises to boost productivity by up to 50% in core coding tasks. That's a massive jump.
It is. And it's a clear signal, isn't it? A real commitment to an AI-native workplace. And Staples isn't doing it alone. You've got Brian Robbins, the CFO.
Right, from DocuSign, high-growth Thesaurus background.
Precisely. And he's been key in focusing GitLab on that predictable subscription revenue.
Yeah.
That's crucial because that steady cash flow directly funds investments in things like remote workspace features, which are absolutely essential for these distributed teams we're seeing more and more of.
And the CTO, Eric Johnson, he was at SurveyMonkey before.
Correct. He's been spearheading innovations like the GitLab query language, GLQL, basically making it much simpler for developers to find the data they need within the platform. So reducing friction.
So these leaders, they're not just making small adjustments. They're really shaping GitLab's core strategy. Look at their partnership with IBM to modernize mainframe DevOps. That really shows their expertise in both cloud and, well, traditional operations.
It does bridge that gap.
And then there's the co-founder, Sid Sijbrandij. His influence is still very much there. Even as executive chair of the board, he's guiding that long-term vision. His original ideas about all remote work, about open source collaboration, they still shape decisions, including this big push into AI tools.
And for you, the individual investor, it's important that leadership compensation is tied tightly to stock performance and revenue milestones. See, Brando's own ongoing equity stake means his interests are fundamentally aligned with yours for sustainable growth.
Right.
GitLab's mission, everyone can contribute. It's not just words. It's a driving force for global software co-creation. Their vision, a future where secure, scalable software delivery happens on one single DevSecOps platform, really emphasizing those built-in AI native capabilities.
And the culture is a huge part of that edge, isn't it? Being entirely all remote, asynchronous. It means they've had to bake values like iteration and collaboration deep into how they operate.
It's fundamental.
It fosters this uniquely high-performance, inclusive environment. It's not just where they work, it's how they work that sets them apart.
So let's unpack the business model. For you listening, it's actually quite straightforward at its core. It's a cloud-based platform.
Yeah.
Developers use it to build, test, secure, and deploy software, all in one place.
Think of it like a Swiss Army knife for developers.
Exactly, a comprehensive toolkit.
That simplicity is appealing, but the real power, it seems, is in the DevSecOps integration. Explain that a bit more.
Right, so imagine building a smart, secure house. Instead of adding cameras after it's built, you design security and operations into every single brick from the start. That's GitLab. It helps developers bake security, development, and operations directly into their code right from the beginning. It includes critical technical layers like CI/CD pipelines, its continuous integration and continuous delivery, which automate testing and deployment, and AI-driven features that scan for vulnerabilities in real time. It's like that smart kitchen analogy you used, alerting you to a fire before it starts.
Got it. And this consolidation is powerful because it replaces separate tools.
Precisely. It replaces fragmented tools like GitHub for just storing code, or Jenkins for just automation, We've seen companies, like HackerOne is a great example, cut their deployment time by 5 times just by moving to GitLab's unified platform. That's a huge efficiency gain.
Wow, 5 times.
Their main product, that all-in-one DevSecOps platform, covers source code management, CI/CD, security scanning, project tracking, the works. And it's clearly found its fit. Over 50% of Fortune 100 companies use it. It was named a G2 leader in spring 2025.
And the roadmap, it's all about AI now.
Very much so. GitLab 18, launched May 2025, brought in AI-powered code suggestions and workflow agents. More recently, they launched a Maven virtual registry in beta June 2025. And Duo Workflow, their autonomous AI agent, is already saving HackerOne 4 hours per developer every week. Real tangible savings.
So what really makes GitLab stand out isn't just one feature, it's that combination. Unified DevSecOps, the subscription model, and that open source commitment.
Exactly. It's that unique intersection. It creates this powerful economic engine they call the open core flywheel.
Explain the flywheel.
Okay, so the free tiers attract a massive user base. These users, along with a broader open source community, contribute code and enhance the cool features.
Right, so the community builds it up.
Precisely.
Yeah.
Then, as those features mature and GitLab develops premium capabilities, think advanced security, sophisticated AI enterprises upgrade to the paid tiers. It becomes this self-reinforcing loop. Community fuels innovation, which drives high-margin enterprise sales.
Like Iron Mountain using it to centralize workflows.
Exactly. They avoided delays and unified their teams. This model gives GitLab a really significant edge.
And their history shows this evolution, right? From open source in 2011.
Right. Incorporated in 2014, Y Combinator in 2015, then the IPO in 2021 at $77 a share. Key innovations mark that journey. GitLab CI back in 2012 was big, and now the AI features in 2024, 2025. Duo alone is giving users like 5x faster deployments.
And the financials back this up.
They do. Revenue grew 31% to $759 million in fiscal 25. Q1 of fiscal 26 hit $214.5 million, up 27% year over year. And think about COVID. They doubled down on remote tools and grew their DevOps market share from 10% to 15%. That shows real adaptability.
Their operations are fascinating too, entirely all remote. No physical offices spanning over 60 countries.
It's a core part of their identity. They leverage cloud infrastructure, AWS, Google, and outsourced community contributions, and even some AI models. It's lean, it's global, and it perfectly fits that mission of enabling borderless collaboration. Very efficient.
And how vertically integrated are they?
I'd call it moderate vertical integration. They control the core platform development, which is vital. But they smartly rely on cloud providers for infrastructure and leverage that open source community for feature enhancements.
Okay.
This lets them integrate everything from code creation to deployment and security. And the results for customers can be impressive. Forrester reported a 483% ROI for enterprises using GitLab.
Wow.
Now, this contrasts with, say, GitHub's closer ties to Microsoft, and it allows GitLab to offer self-hosted options. But it's worth noting, relying on third parties does introduce some supply chain risks, like that vulnerability they recently had to patch.
How do they actually get the product to users, the distribution model?
It's cleverly designed. Freemium, direct-to-consumer SaaS through their website. Self-serve signups are easy. But they also have enterprise sales teams for the bigger deals, the upsells.
And the community plays a role here too.
Big time. That open source community distribution is innovative. Users contribute, adopt organically. Plus, they have partnerships with AWS, IBM for bundled offerings. The model scales by converting about 5% of free users to paid, engaging developers with AI trials, which leads to things like 7.5 times faster pipelines for customers.
And the revenue streams are predictable.
Highly predictable. Over 95% comes from subscriptions, long-term contracts. Their ARR, annual recurring revenue, topped $800 million in fiscal 25. And that net revenue retention, NRR, is a very healthy 125%.
Meaning existing customers spend more over time.
Exactly. It shows stickiness and value. This provides a strong financial buffer and consistently fuels their investments in AI innovation.
Okay, let's pivot to competitive advantages. What really gives GitLab its edge? You mentioned near monopolistic traits.
Well, in unified DevSecOps, they have a strong position. Around 15% market share overall, but very dominant in that specific unified category. They benefit hugely from open source lock-in. Enterprises wanting to reduce tool sprawl often turn to them.
Makes sense.
Economies of scale are also huge. With over 30 million users, their cost per user drops significantly. This allows them to maintain high gross margins, 88.6%, and reinvest heavily. They're putting over $100 million into AI R&D, far more than smaller players.
And network effects. The platform gets better with more users.
Absolutely. It's classic network effect. More users mean more contributors, improving features via that open core model. We're talking over 13 million merge request code contributions driving adoption. Their 20% year-over-year user growth is evidence of this reinforcing loop.
They also position themselves strategically against point solutions, right? The all-in-one approach.
That's a key piece of counter-positioning. Instead of customers needing to stitch together different tools, GitLab offers it all. Customers like Iron Mountain see those 5x speed gains because of this unified approach. That's hard for competitors focused on single functions to match.
And switching costs must be high.
Very high. Migrating code bases, repositories. It's not just time and money. It disrupts established workflows. There's an inertia, almost an emotional tie development teams have to their tools.
GitLab's brand seems strong too, particularly around innovation.
It is. They're seen as a DevSecOps innovator. This allows premium pricing, like that ultimate tier at $99 per user per month. That brand is built on trust and that deep loyalty from the open source community.
Do they have any cornered resources, things others can't easily access?
You could argue their talent pool is one. The all-remote model attracts about 20% more applicants, giving them access to global talent others might miss. They also hold patents in AI code generation and have those strategic partnerships with Google and IBM.
What about their processes, that asynchronous model?
That's unique process power. Honed over years, it cuts deployment time significantly, maybe 7.5x. It's a finely tuned machine, very hard for competitors, especially traditional ones, to replicate effectively. And their proprietary tech, like the AI and Duo workflow. McKinsey studies suggest it offers potentially 10x efficiency gains in coding. That's a powerful claim.
Timing seems to have played a big role too.
Absolutely critical. They rode the remote work wave perfectly post-2020, and they were ready for the AI wave in 2023. That gave them a real first-mover advantage in AI DevOps. Plus, their rapid execution, fast launches, quick fixes, keeps competitors on their back foot.
How sustainable are these advantages?
They seem quite sustainable, especially the ones tied to open source and continuous AI evolution. But we have to acknowledge potential erosion. AI disruptors like Microsoft's Copilot are a real threat. New entrants could emerge. And if the tech landscape shifts dramatically towards no-code, GitLab would need to adapt significantly.
Okay, let's talk growth and resilience. What's their strategy moving forward?
It's pretty clear market penetration is key upselling existing users. They're targeting 25% adoption for that premium ultimate tier, up from 5% now. Then market development expanding into new regions like APAC and EMEA. And of course, continuous product enhancement, particularly deeper AI integrations.
How will they achieve that land and expand?
Yes, land and expand is core. Converting free users to paid is crucial. And they might look at strategic M&A, especially for acquiring specific AI capabilities.
The potential seems significant, but what are the risks?
The potential is huge. New markets, like Asia growing 40% year over year, are promising. New AI products could be transformative. The reward is clear in their recent growth, like that 29% revenue jump in Q4 fiscal 25. But competition is the main risk. That said, the DevOps market is massive, over $40 billion now, projected toward $100 billion by 2030 with AI's impact. GitLab is aiming to capture maybe 20% of that.
And it's applicable across many industries.
Very broad applicability: tech, finance, government, and it scales globally. Their supply chain, relying on AWS and Google, is diversified, and multi-cloud support mitigates some risk. Their customer base is also diverse across industries and geographies, which helps stabilize revenue.
And the need for their product seems pretty durable.
It's extremely durable. Software isn't going away. We estimate an 80% probability their core products will be needed indefinitely. Their subscription model provides resilience during downturns, and they're riding those big secular trends: AI and remote work.
So, main growth drivers are AI, enterprise upsells, global expansion. Main risks are market saturation and competition, especially Microsoft.
That sums it up well.
Let's zoom out to the wider economy. How do things like interest rates affect GitLab?
Well, rising rates, like we saw in 2025, technically increase borrowing costs. But GitLab has very little debt, about 0.3% debt to equity, and over $1 billion in cash. So the direct impact is minimal.
But it could slow down customer spending?
Exactly. That's the indirect risk if customers tighten their IT budgets. Trade tensions are another factor. They could disrupt cloud partners, but GitLab's virtual setup minimizes direct impact. It might even help expansion in tariff-free zones.
What about inflation?
Inflation could squeeze those great margins, maybe from 88% down towards 85%. but their pricing power and efficiency gains should help offset that. Again, the risk is more on the demand side if customers cut back.
And company-specific things, AI regulations.
Emerging AI regulations are definitely something to watch. They could slow rollouts. But GitLab's focus on security might actually position them well in a more regulated environment, maybe even increase demand for secure, compliant platforms. And tech layoffs. Volatility there might impact hiring broadly, but GitLab's remote model often attracts talent during shifts.
Okay, let's get into the latest numbers. Q1 fiscal 26, ending April 2025.
Right. Revenue is $214.5 million. That's up 27% year over year. Strong demand signal. Gross margin, incredibly high at 88.6%. Operating income is turning positive, and free cash flow hit $104 million a record. Shows real operational discipline.
What about that Rule of 40 metric?
Very healthy. It's at 55%. That's combining the 27% growth with their free cash flow margin, which is around 28%. It indicates strong product market fit and efficient growth. And their return on invested capital, ROIC, is around 15%, showing efficient use of capital, especially for those AI investments.
And the balance sheet sounds rock solid.
Over $1 billion in cash, negligible debt, current ratio over 2, meaning good liquidity. Book value grew 20% year over year. Free cash flow up 50%. The core SaaS metrics are also strong. AR over $800 million and RR 125%, serving over 8,000 large enterprises.
How do they stack up against peers like Atlassian?
They generally outperform on margins and ROIC compared to Atlassian, which shows efficiency. Atlassian's growth was around 24%, GitLab's 27%. However, GitLab clearly has lower overall market share compared to Microsoft's GitHub. The trend, though, is stabilizing growth around that mid-20s% range, with expanding margins due to scale. That positions them well.
What's been happening recently? Any news?
Yes. GitLab released patch 18.1 on July 9, 2025, fixing some vulnerabilities. The stock took a brief 10% hit on those security concerns, which happens, but it bounced back pretty quickly on positive news about AI upsells.
So investors are balancing security risks with AI potential. What's next?
Q2 earnings are expected around September. You'll want to watch AI adoption metrics very closely there. Investor focus is also on the impact of that IBM partnership and any potential M&A activity. And as we mentioned, external factors like AI regulations could actually be a net positive if they drive demand for secure platforms.
What's the buzz among individual investors?
Sentiment. Looking at platforms like X seems about 70% positive. People are highlighting the $1 billion cash, the AI tailwinds. The analyst buy ratings, Rosenblatt has a 50/80 target, for instance.
But there are concerns too.
About 30% are neutral or negative. Those concerns center on vulnerabilities popping up and the intense competition. Priorities for investors are clearly growth through those upsells and maintaining leadership in DevSecOps. We see comments like at StockShaw calling $43 a steal, or at Shanky noting enterprise switches from GitHub. The dominant narrative is definitely GitLab as an undervalued play on the AI-driven future of development.
Okay, valuation. This is key for investors. Where does GitLab stand now?
As of July 16, 2025, the stock, GTLB, is around $42.83 a share. Market cap about $7.08 billion. Now it's down nearly 24% year-to-date.
Right to drop.
Mostly due to what the market perceived as conservative guidance from the company, plus those broader worries about enterprise IT spending slowing down. It's significantly below its 52-week high of over $74.
This brings us to margin of safety, doesn't it?
Exactly. That fundamental concept from Graham and Buffett. For GitLab, it means asking, does $32.83 provide enough cushion against risks, like tougher competition from GitHub, or maybe AI monetization taking longer than hoped? A good margin, say 30–50% below your estimate of fair value, gives you room for things to go slightly wrong and still potentially come out ahead.
Right. Without that buffer, you could be overpaying, even for a great story.
Precisely. Overpaying magnifies potential losses.
So why does valuation matter so much here? It's more than just the price tag, right?
It's your compass. It reflects market confidence in the long-term vision versus short-term bumps. GitLab's forward PE is high, around 56.82. That could be hype, but it could also reflect expectations of massive growth from AI features, making developers, say, 10x more productive. Valuation helps you gauge if the price supports that potential to redefine the workplace, or if it's just inflated by maybe fleeting AI excitement. It helps you time your entry.
How do analysts try to value GitLab? What methods do they use?
They use a few approaches. Intrinsic valuation, like discounted cash flow or DCF. That involves projecting future free cash flows. And remember, GitLab's FCF turned positive, $104 million in fiscal 25. Based on assumptions like sustained 25% plus revenue growth and margins expanding towards 30% via AI, DCF models often put fair value somewhere between $60 and $80 per share.
Okay, that's one way. What about comparing it to others?
That's relative valuation. Using multiples like EV sales, GitLab's is around 7.51. That's actually below peers like Atlassian at 10x or ServiceNow at 15x. This suggests it might be undervalued, especially if it captures a bigger slice of that growing $40 billion plus DevOps market. And that Rule of 40 score of 55 is strong compared to many SaaS peers. Monte Carlo simulations often point to a median value around $65.
So we have the bull case and the bear case. What's the bear argument?
Bears, including some analysts like JP Morgan, who are neutral with a 58 Taylor target, or TD Cowen, who lowered their target to $75, point to sector pressures. They highlight that conservative fiscal 26 guidance 24% growth, down from 31%, and the fact that Q1 results only slightly beat expectations. They argue the high PE, over 470 trailing, and the EV sales of 7.51 aren't justified given Microsoft GitHub's Copilot strength and Atlassian's scale. They worry the AI hype might fade. Some retail sentiment echoes this, focusing on vulnerabilities and competition.
And the bull case?
Bulls, including institutions like Barclays with a $165 overweight rating, see GitLab as significantly undervalued, maybe 60% or more. They emphasize AI-driven monetization, those Duo features boosting upsells. They see premium tier adoption hitting 25% eventually, capturing a big chunk of a $100 billion market by 2030. They point to still strong growth, 29% in Q4 fiscal 25, that $1.1 billion cash pile for M&A, and clear leadership in AI DevSecOps. Retail bulls on X are optimistic, generally aligning with the analyst consensus target around $63.24.
So weighing those, what seems like the most probable outcome? Where's the opportunity now?
Leaning towards the bull thesis seems more probable based on the current trajectory and market potential. At $42.83, GitLab appears to be trading at a significant discount. Compare that to analyst targets around $63 plus SEC, suggesting over 47% upside, and those DCF estimates of $65–80 imply a margin of safety between 35% and 50%. The current undervaluation seems largely driven by market overreaction to that conservative guidance, potentially overlooking the transformative potential of their AI strategy.
Okay, let's bring it all together, answering that big question we started with. Will GitLab transform the future workplace?
The verdict seems to be yes. GitLab is exceptionally well positioned. It's actively evolving into a comprehensive AI-native DevSecOps leader. It looks set to genuinely redefine developer productivity, collaboration, and security in our increasingly remote distributed world. It's more likely to be a frontrunner than just another tool, although execution risk always remains.
And the evidence supports this transformation.
Strongly. Look at the track record. Founded 2011, open source roots, navigating scaling challenges, the Y Combinator pivot in 2015. Key decisions, like integrating CI/CD early, unified workflows, and cut deployment times dramatically for users like NASA.
Right.
Fast forward to 2025. The AI push is aggressive. GitLab Duo boosts efficiency 20–50%. Duo Workflow uses autonomous agents. These aren't minor tweaks. They directly solve problems like tool sprawl and security gaps. That Forrester 483% ROI figure and adoption by over half the Fortune 100 speak volumes.
Their resilience during the pandemic also seems key.
Absolutely. Their all-async culture didn't just survive the 2020 remote work surge, it thrived. They gained market share 10% to 15% by enabling seamless collaboration. That experience is a blueprint for tomorrow's hybrid developer world. And financially, the 27% growth, 95% recurring revenue, 125% NRR that funds the R&D needed to keep innovating in AI, letting developers focus more on creating, less on plumbing.
They still have to navigate strong competition, though.
No doubt. GitHub is formidable. But GitLab's open core flywheel, that 30 million user community contributing features, strategic partnerships like IBM for mainframes. These provide a strong competitive moat. It supports a high probability, maybe 70–80%, based on McKinsey analysis of air moat trends, that GitLab will achieve and maintain leadership.
So the narrative is almost an underdog story, overcoming challenges to pioneer this new AI-driven workplace.
You could frame it that way, overcoming vulnerability scares, market doubts about guidance, leveraging Staples' strategic experience, all to build a future where AI anticipates needs, secures code automatically, and accelerates global teams, empowering the next generation to build faster and safer.
Okay, looking beyond the surface, what's the edge for individual investors? Where's the asymmetric information?
A few things. First, that open source flywheel. Over 13 million merge requests. Markets often undervalue this community-driven innovation and lock-in. It's hard for closed source competitors to replicate. Monitor contributor growth, it's a leading indicator.
Interesting. What else?
Second, the remote talent advantage. Attracting 20% more applicants gives them faster AI iteration potential. Watch their job postings. A surge in hiring, especially in AI roles, could signal expansion well before it hits the financials.
And you mentioned a conceptual asset play, Bitcoin.
Right, this is more conceptual, thinking outside the box. GitLab doesn't hold Bitcoin now, but consider the potential strategic angle. A company like MicroStrategy adds Bitcoin to its treasury as a hedge against fiat currency devaluation, leveraging Bitcoin's finite supply and historical growth as potentially a superior long-term asset. For GitLab, conceptually, a similar move could offer long-term balance sheet strength. It's something for you as an investor to recognize as a potential, perhaps currently overlooked, strategic option that could offer resilience.
Fascinating. Okay, what about navigating the unknowns, the risks we can identify?
Key risks. The known unknowns include vulnerability exploits damaging trust. You can track this if breach incidents tick up consistently, say over 5% quarter over quarter. Also, intensified competition watch for market share dipping below that 15% threshold.
And the truly unpredictable stuff, the unknown unknowns.
These are harder, radical tech shifts, like quantum computing potentially breaking current encryption, or sudden, sweeping AI regulations that halt key features. Predicting these is tough, but portfolio diversification is your best defense.
So wrapping up, where should investors focus their attention for an edge?
Track that ultimate tier adoption hitting 25% would be a very strong signal of AI upsell success. Watch Q2 earnings very closely for specific AI metrics management might share, and maybe think about how network effects, so powerful for GitLab's community, also play out in other domains, potentially offering insights into broader strategies for portfolio resilience in today's volatile market.
Love this? Drop a like, subscribe, and ring the bell so you never miss a podcast.